Ever wondered about the thrilling world of stocks and shares? Buckle up, because you're in for a ride. Here, we'll start with basics. The stock market is a bustling, dynamic arena where shares of public companies are bought-sold. But what exactly are these stocks and shares? Simply put, a stock represents a stake in when you buy a stock, you're purchasing a piece of that company, making you a shareholder. And these public companies? They're corporations that have sold a portion of themselves to the public, allowing people like you and me to invest. This exchange of shares happens at a place we call the stock market. It's a kind of marketplace, but instead of fruits and vegetables, you'll find investors trading shares. So the stock market is essentially a marketplace for investors. Now let's delve into its history. The birth of the stock market in the United States was more like a wild roller coaster ride. It all started in the late 18th century with the formation of the New York Stock Exchange, a simple meetup of 24 brokers under a buttonwood tree. This, the start of what we now identify as the vibrant, throbbing hub of international finance. The stock market's journey has indeed been tumultuous, marked by booms and busts. From the notorious Wall Street crash of 1929 that triggered the Great Depression, to the dot-com bubble burst at the beginning of the 2000s, and the financial meltdown of 2008. The market has witnessed it all. Of these setbacks, it has always found a way to rally, showing an unyielding. As we move to the current day, the stock market stands as a tribute to the ever-resilient spirit of capitalism, driving the world's largest economy and dictating global patterns. The stock market has indeed come a long way, hasn't it? Now let's delve into stock indices. Ever heard of the Dow Jones, S&P 500, or NASDAQ and thought it sounded like a secret code? Let's crack it together. Stock indices such as these are a way of measuring the value of a section of the stock market. They're compiled from the prices of selected stocks, typically a weighted average. Now let's talk about some major indices. The Dow Jones Industrial Average, or the Dow, is one of the oldest and most watched indices in the world. It represents 30 large public American companies. Next up is the S&P 500. This index includes 500 of the most widely traded companies in the United States. It provides a broad snapshot of the overall U.S. equity market. And then we have the NASDAQ Composite, an index of more than 3,000 companies listed on the NASDAQ Stock Exchange, including many technology giants. Stock indices are like the pulse of the stock market. Now, let's see what can make this pulse race or slow down. Why do stock prices go up and down? It's not just economics, it's a thrilling saga of events. Let's delve into the epicenter of the story. The stock market is a complex creature, influenced by multiple elements. Firstly, we come across economic indicators. These are metrics about the economy that can signify the vitality of a market. Consider unemployment rates, inflation, or gross domestic product. The economy is robust. The stock market usually follows the trend. Next, we encounter political events. Elections, new policies, international disputes, all can instigate fluctuations in the stock market. Businesses require stability to flourish, and political uncertainty can spawn volatility in the markets. Finally, we have corporate news. Earnings reports, mergers, scandals. Any tidbit about a company can influence its stock price, and these are merely a handful of the elements at play. As you can see, the stock market is impacted by a myriad of factors, but who are the key players in this market? Think you need to be a Wall Street whiz to invest in the stock market? Think again. Retail investors, that's you and me, folks who invest personal funds not on behalf of a company, have a significant place in the now. How does one start investing? Well, first things first, you need to have a brokerage account. This is your gateway to buying and selling stocks. Then research, understand the companies you're interested in, look at their financials, their performance, their potential. Next, diversify your portfolio. Spread your investments across different sectors. This can help mitigate risk. Remember, investing is not a get-rich-quick scheme. It's about patience, strategy, and informed decisions. Finally, keep an eye on the market trends. They can give you insights into when to buy or sell. So, there you have it. The stock market is not as intimidating as it seems, is it? Remember, the best investment you can make is in yourself. Stay curious and keep learning.